Well, and that signifies the end of trading for today, and it's time for the financial analysis. And we are now joined by Merciline Gitebi, who is a senior research analyst at Kingdom Securities. Many thanks, Merciline, for joining us.
Thank you.
Well, we've seen a lot of moves on the market this week. Perhaps what stands out for you, especially when it comes to the NSE 20 share index? We've seen it up by about 1.8%.
Well, it's true. I think we've just seen some great movement in the market. I think the performance has been quite robust compared to other periods of trading previously. And I think mainly what we've been seeing right now is we have had more of net. We are starting to see foreigners actually come back into the market. Over the past 2-3 weeks, we have seen a lot of net outflows. But now we're already seeing some comeback in the market. And I think already what we are starting to feel is that some of these counters are actually posing as very good stocks for these investors in terms of opportunity, especially for the bargain hunters. So what we are going to continue experiencing in the market as we head into the results announcement period is that you're going to see a lot of these companies and a lot of investors actually having more interest in the stock market, which is going to cause some significant comeback.
All right.
Yes.
Talking about the results season, we've seen this week Barclays Bank did release its full year results for 2017. Not a rosy picture of sorts. They did report a drop in net profits by about 6% to 6.9 billion shillings. And this has been anchored on the prevailing market situation. That is, of course, the interest rate cap, the prolonged electioneering period. And I'm seeing it's among the top movers. It has actually moved 4.4 million worth of shares.
Well, it's good to note that actually Barclays is one of the best dividend earners in the market. In terms of investors looking for an income, I think they're looking at it as more of a stock that can actually give them income. Because if you look at the dividend yield now, going by what we have already, at 1 shilling, I think, payout, that's a very good, it translates to about 7% dividend yield, which is actually very good for any investor, especially in a time whereby the banking stocks have not been able to reward investors on the capital gains front. So I think investors are actually looking to lock in on this particular stock so that they can actually continue to enjoy the income that actually the company gives, as much as the company has not performed very well.
All right.
Yes.
And still talking about banking, we've also seen if I scroll here, I can see Cooperative Bank is also among the top movers, moving 3.6 million. NIC Bank moving 1.43 million. And Merciline, what's happening in the banking sector really? Are investors already beginning to take positions?
Well, for me, this year, the banking sector is looking up, because if you look at the kind of indications you have gotten from the market, you are looking at a market whereby there are actually possibilities of repealing the interest rate cap law. What will that translate to?
Are there possibilities?
In my opinion, yes. I think there will be possibilities, because already we have seen a lot of action coming from the regulator, from the KBA. And I think this is just awaiting now a move back into the parliament so that the whole process can start again and it's taken back to the president for an assent. So I think what we're expecting is that we might see a repeal of the law.
All right. Probably
in the next half of the year. But then again, this is purely based on now economic conditions. Because as we know, I think this has mainly been in my opinion, I think it was more of a politically driven move more than an economically driven move.
All right.
The banking sector has not been able to translate even anything on the CBR in terms of the monetary policy transmission system. We've not been able to see that coming into the market per se because of now the interest rate cap. So I think once this law is repealed, then definitely it's going to be a very big boost in terms of valuations for the banks. We're already going to see now banks returning to profitability, as much as now they're going to come up with a system of managing the rates. We're still going to see banks actually come back into profitability.
So what I'm getting from you, Merciline, is that the rate cap sort of instilled some level of discipline in the banks that were quote-unquote, pushing consumers really when it comes to double-digit profits and having high rates, that they are making some serious margins out of that.
Yes, definitely, because like from the Barclays results, if you noted, there was some bit of slag performance when it comes to retail segment. And they're actually talking of now there has been more growth in terms of profitability even from the corporate banking segment. They have not been able to actually position themselves well in terms of pricing pricing for the risk. So that's why we have had the stagnant, actually loan book growth in Barclays. Secondly, I think if you have noticed, the banks have actually moved into lending to the government. We have seen a very huge growth, about 21% into government securities. That poses as an indication of where now the market has been. In terms of even driving for economic growth, the private sector is nowhere to be seen. So I think banking sectors now are already looking up, and we are in a time whereby maybe for any investor looking to actually position themselves in the banking sector, I think this is the best time, because sooner or later we're going to see a market rally on the banking sector.
Interesting. Yeah. Let's shift gears a bit, Merciline, and talk about the top gainers. And I'm seeing NIC also making it to the top gainers. You've seen it in the top movers. Equity Group Holdings also doing pretty well. The stock is up 5.85%. NIC Bank up 6.43%. Olympia Capital Holdings also doing well, up 9.68%. And let's sort of delve deeper into this particular stock, that is, of course, NIC Bank.
Well, for me, NIC, the valuation is still holds. There's still some headroom for an upside, because it's one of those stocks that I have seen some significant growth, especially when it comes to asset growth. Again, I think they have really benefited from asset financing. So in terms of their revenue growth, they really stand out. Looking at the valuations, I think NSC is trading at a discount currently. We are looking at valuation of about, giving a target price of about 50 shillings. Again, it's the current trading price of about 37 shillings, which is still quite a good upside. When you look at their NPLs management, I think NIC Bank has also been able to manage their NPLs quite well, and they think they are still in that momentum of actually managing their NPLs. So we still expect a lot from NIC Bank.
All right, I like a bullish outlook. And let's finish off with a look at the top losers. Kenya Airways is topping the charts. They're down 12.31%. We're also seeing Uchumi down about 6.25%. Really, looking at these particular stocks, we've seen Uchumi this week. They did announce that they are shutting down their Sarit branch. And this is, of course, linked to the escalating operational costs. And there's still some sense of Uchumi can bounce back. I don't know, from a market point of view, by us seeing it on the losing counters, what does this mean?
Well, for Uchumi, they just released their half-year results for the year ended December. And looking at them, I think I wasn't quite impressed.
Had a serious loss,
the results were quite weak. And again, we have been hearing much of these stories about restructuring. So far, they have closed, I think, a number of branches. We have had them actually retrench staff. We have had so many initiatives actually playing in.
Yes.
And I'm looking at it maybe from now, the kind of model they're looking to adopt. They are actually looking to adopt a franchising model whereby they come into the estate and actually build a franchise around the Uchumi brand with the markets in the estate. I think that is what it can actually drive growth for them, because what we have seen so far, even in terms of their performance, I think right now without even sufficient funding to start with, we heard of the strategic investor Kuramo actually pulled out at some point. So that means they're still in dire need of actually capitalization, which until it comes through, I think Uchumi still stands at a point whereby they still can't do much with whatever they still have in place, because the cost management initiatives are still not working so well for them. Even closing the Sarit branch, I mean, well, I don't expect it to really cause a very significant impact on the financial books for the year ending June 2018.
And is it a systemic thing happening in the retail sector? We've also seen Nakuma not doing so well.
Well, I would say so, but mainly for the retail sector, locally owned supermarkets. If you look at for the internationally owned, I mean, like, they're looking for opportunities in this market. We have Carrefour, which is opening left, right, and center around the country, and where 5
stores now.
Yeah, so I think it's mainly a challenge for the local supermarkets. But I think what they just need to do is just to relook at the model and the strategy so that they can see how best they can compete effectively. Because also I think the competition has really grown to be stiffer. They just need to relook at how they can be able to compete more effectively with actually the international players.
All right. Many thanks, Merciline.
Thank you.
Pleasure having you on the Trading Bell.
Thank you.
Well, interesting insights in relation to how the markets have been performing, and it's now time to catch up with Markets 101. Well, it's time for our favorite segment, and that is Question on the Street. And here is this week's question.
My question is, when an investor wants to invest, what should he or she look into investing when coming to the Nairobi Securities Exchange?
Well, thank you for that question. Investors usually have different objectives when actually they're looking to invest. And I think the most important objective is actually the return that they're actually willing to make, or they're actually looking forward to make. They're also looking at the risk that they have, because you have to get a matching effect or a match-off between your return and the risk. So most of the times you'll find that for an investor who has a very high risk appetite, they also stand a chance of actually getting a high return. But for investors who have a low risk, they actually get a low return. So for an investor actually looking to come into the NSE, I think the most important concern for them should be, what are they willing to forego to actually make a return for them or to make a profit from it? And return in this case could be in the form of a capital gain, maybe when there's a price increase from X to Y, or a dividend, maybe when a company announces a dividend.
Thanks a lot, Merciline, for making time for us.
And thank you.
Well, thank you for that question, and I hope you've been answered. And do keep engaging with us and send us in some of your feedback. Well, it's time for the historical fact on the NSE. Well, that brings us to an end on this week's episode of The Trading Bell. Many thanks for watching, and of course, remember you can interact with us on our social media platforms that you can see at the bottom of your screen, and you can tweet me directly at Agina Abi, and we'll be able to sample some of your views in our next show. Well, on that note, it's bye-bye from us. Many thanks, Merciline.
Thank you.